Hi guys, welcome to your first class. And today's topic is perception, and probably the most important topic, especially for someone who has already read a lot of books, has done some kind of programs, and those who have some kind of exposure already. And it's a very good starting point for someone who's getting started in stock markets and technical analysis in general. And by the end of the video, you will understand the importance of what I just said. So now in this talk, or I'll be talking about perception, how I decode that word, and through that process of decoding that word and working around that, this is a hint for you, a hint on how to approach anything which you are learning. Let's say you are learning moving average, which we will. But if you're learning moving average, you'll get an idea of how to approach moving averages. Let's say you are learning RSI, you'll get the idea. So, this is one more aspect that I'm going to cover today to how to approach anything in the markets, or I would say anything in general. Now, what will happen after this lecture is you will know how to see the charts, what to expect from what kind of charts, and this will help you in deciding what to trade and what not to trade. And a lot of things we will discuss as the lecture goes through. So, I think we'll just begin now and we'll keep some rawness in this lecture. So the first thing is, let's understand why are we doing this perception, and I've written down here the definition of perception, simple definition of perception, right? And this is very important. The first line says the act of perceiving or the ability to perceive. Ability to perceive. I think everybody has ability to perceive, right? All the humans up to a good deal of extent. So I think this is fairly understood कि आप चीज़ों को कैसे देखते हैं, आपका नज़रिया क्या है basically. The second line is very, very important. In fact, second line in the first four words only does a lot of work. So, which is mental grasp of objects. Now, hear me out. Mental grasp of objects. Now, my mental models, your mental models are completely different of some things. Let's say I talk about color blue. Your mental model and my mental model of color blue is the same because it's something universal. Everyone agrees to that. Similarly, same thing goes for a car. If I say car, you have the same mental model of a car, four wheels in most of the cases. So anything you take, circle, you have the same. Rectangle, same. Now we are going into the world of trading. Here also there are a lot of mental models that you need to grasp. Now what happens is, let's say there is a big green candle. Okay. Now let's say somebody says a big green candle has been made. That's it. That's the statement. According to your mental model and my mental model, how we perceive this is going to be entirely different. You, someone who's not so good with technical analysis, doesn't know a lot of things, he will say that it's a bullish candle. Okay, he will outright say this, bullish candle, because that is what his mental model has been built. I will say, okay, it's a green candle. Where is it happening? And is it a daily green candle or is it a monthly green candle? So this is, is it with high volumes or low volume? So there is a lot of things, but somebody would just jump to conclusion. I would only answer after questioning a lot of things. So that is my mental model of a single green candle. So just imagine when there are charts, when there are time frames, when there are moving averages, RSI, a lot of people have a lot of different mental models, and that is how trading works. So I hope you got the idea, right? So this is very important, that what is your mental grasp of objects. Now at this point of time, you might be having very different idea of the mental grasp of the objects. I'll tell you how. Let's say you see a chart. Now you tell me that I'm watching the chart of coal pal. I'll immediately not pay any attention to whatever you say after that. Let's say you say ki, hey, I just saw the chart of coal pal and I saw, at that particular moment I will not hear anything that you say afterwards. Why? Because I have some mental models related to that particular stock. ठीक है. Now same thing, you come to me and you say कि fact जो stock है उसके अंदर this is happening. I will be 200% focused on what you are saying, because the mental model that is needed for stocks is also different, right? Which is what I'm going to give you. And once ये mental model आ गया, your speed of scanning the stocks is going to be 5x or 10x. You are going to see immediate shift the moment you complete this lecture whole and you shift onto the videos, or sorry, you shift onto watching the charts. There is a complete difference you will notice, right? So that is what we are going to see, that how you perceive things. So this is the basic definition, right? Now let me draw something for you. So let's say there is a stock, right, which goes up, this does this and does this and this. Okay, that is one way of a stock moves. Another stock, let's say, which does this. Okay, this is how the stock moves. You see, there is a drastic difference in how the stock is moving. Does nothing, just nothing, right? Now see, perceive. How will you perceive these two stocks? Let's say I say that, okay, find me a setup to trade. What you will do is you will analyze both these charts and you will give both the times, 10 minutes. You will give this stock, the first one, and the second one, both of them 10 minutes you will give them. And when I'll come to the screen and you'll say, okay, analyze this chart, I'll be like, okay, why are we watching this? Okay, let's see this. That's it. So what a beginner does is, let's say he learns some pattern, or let's say he learns a trend line. What he will do is start drawing a trend line here. He'll see something like this, and he'll do a lot of stuff, which is not at all required. You are not even required to see the stock. And I'll tell you what, because this is a stock which instrument you have to play, right? Because you can play a stock through futures, options, or cash equity. The moment you see a chart, you should be able to decide how are you going to play it. If you want to play futures, you have to see the chart. Options, you have to see the chart. Cash, you have to see the chart. So it lies in perception. I'll give you a lot of mental models now, that how I'm doing, what I'm doing, right? So I think we'll begin with that. So now let's see what are the stocks in the Indian markets. Okay. So the first is large cap stocks. Okay. Second is I would say mid cap, and another is small cap. These are broad three categories. Okay. And I hope you understand those. If you don't understand these three terms, what is a large cap, mid cap, small cap, please pause the video, do a quick Google search, and you will get your answer. So large cap stock is basically company which is very liquid, which is heavily traded every day. And most of the large cap stocks which you are talking about here will be in FNO. They will have a futures and options. Mid cap, some will be in futures and options, most of them will not be. And small cap, none will be in futures and options, everything will be in cash only. Now here is the thing here that you have to catch. Now let's understand what is futures, options, and cash, and how do they impact us. So see here, futures and options, when a stock goes into futures and options, and versus when a stock is only in cash, these are only the ways you can trade a stock, right? What happens is, I will tell you, let's consider some stock, okay, which is small cap, which is not in futures and options, it is only available through cash. Now my question to you is, I say that in the next 10 days the stock is going to go down by 10%. You say, okay, great, in which of those 10 days is it going to happen? And I come to you with the answer, I don't know. Out of any 10 days, the stock can go down 10%. I don't know what exact day, but it will go in the next 10 days. You as a trader cannot build a short position here. You cannot short first, then buy later. You cannot do that. Why? Because in cash, only buying is allowed. If you want to short, you can only short it intraday. You cannot carry the position. So what you will have to do is you come in the morning, you see the chart, you take a short position. If nothing happens by 3 p.m., you cover your position. And you have to do it till the day it comes, it crashes. So what is happening here is you are not able to carry forward your short position. You are being forced to buy your position at the end of the day if the stock doesn't move. And every morning you are forced to create a short position only, every morning only. While let's say that stock is in futures and options. Now what happens? I say you that in the next 10 days this is going to go down by 10%. What will you do? You will simply go and you will sell the futures or you will buy a put option. So do you see a difference here? In the cash stock, you can never build a short position overnight for a medium term or a short term. While in futures and option stocks, there is a fresh group of sellers which can stay in the market, which can carry forward their positions. Because of which what happens is there are two kind of pressures here. What are those two kind of pressures? Those are that buyers and sellers both exist with their viewpoints. While when we talk about the cash segment, only buyers can carry. So essentially only buyers are there. Whoever is trying to sell is basically an intraday player or is he's just trying to close his bought position. यहाँ पे ऐसा नहीं. So this is a very important difference you have to understand. Now, how does it affect you? How does it affect our perception? Important point is, यहाँ पे futures and options में there will be a selling pressure, added selling pressure. दो टाइप के sellers होंगे. एक जिन्होंने पहले buy किया and now they are booking their profits by selling what they are holding. दूसरे लोग यहाँ पे होंगे who are creating sell positions, who don't hold any position. They are trying to create a new position as a sell and then when the price dips, they will buy. उनसे क्या होता है? Both directions में the pressure is a lot because there are a lot of kind of positions being opened, right? A buyer is selling, that is one position. A seller is selling, that is one position. A seller is buying, that is another position, right? A buyer is buying, that is another position. So there are four kind of pressures. यहाँ पे there is only one thing. A buyer is selling or a buyer is buying. Seller can sell, but that is intraday. So most of the stock you will see don't give you a great opportunity for that. Or most of the people are not interested here for creating sell positions. So because of this, what happens is now your work is to now go see the stocks of futures and options. Let's say there are 190 stocks in futures and options. Most of the stocks on good days will only move 2% or 3%. On bad days, they will also move 2% or 3%. And most of the time, they will be stuck in 1% plus minus 0.4%. That is the whole range that they will move. When they will be having their earnings or, whenever there is a big news event or something, those are the days where you can see a 10% move or a 20% move. But out of 190, almost you will see that 170 stocks don't move really well. They just move a couple of percentage here and there, and that is fine. Why? Because most of the players can earn handsome amount of money through futures, even if the stock moves 1%. That is why only a 1 or 2% move is enough for a futures and options player if the stock is in FNO. Now just think about somebody who's a cash player. Now he goes whatever knowledge he has and applies that in futures and options as a cash player. What will happen is, let's say he puts a stop loss of 2% or 3%. What will happen? I just told you that. I just gave you the answer before it, asking the question. And the answer is, if your stop loss is 2-3%, and if I'm saying that on a good day, the stock is moving 2% or 3%, what is your risk reward actually going to be? What are you exactly playing for? I hope you are understanding it. I'll tell you how. Let's say this is the stock. Let's say this is what the stock did, and this is how it looks. Now what will happen here is a VCP guy will come here, he will draw this line, okay, and he will say, oh wow, this is a VCP pattern, this is what Mark Minervini told, or this is what I've learned. So now what he will say, that a breakout will come something like this and he will make huge amount of money. But what will happen is this breakout comes and then this happens, and then the stock does this, then this, then this, and this is how basically the stock moves. At this point, this guy will be devastated and would be probably blaming the markets. It doesn't work, it faded, it's quoted, or whatever he's saying. But just hear me out. This move, this up move was probably 3%. When he was buying the stock, his stop loss was 3%, right? For him, this was a bad trade. But for me, if this is a futures and options trade, this was such a great opportunity to make a lot of money. Now, this compare to a very good cash stock, compare it to a cash stock which is not in futures and options, it's a part of mid cap or small cap and not large cap, okay? Similar pattern you will see, this is forming up kind of a VCP or whatever. I'll explain. If you don't know VCP, don't be worried about that, it will come on later. What will happen with that is this is what the stock will do. Now what will happen is this guy will be like, oh, this stock did something like this, great move, but this did not move great. Now what he will say, well, the stock markets is a game of probabilities, or it's a game of luck or chance, whatever kind of excuses people make. But the basic point is he doesn't even understand these kind of concepts, and that is why he doesn't know what kind of perception, what kind of mental model is needed to analyze this stock versus this stock, right? So this is the importance of understanding this categorization. What you have to understand is there is 3 category of stocks: large caps, mid caps, and small cap. Usme bhi there is another further 2 divisions. The first one is futures and options. The stock is large cap and is in futures and options. Stock is in mid cap and futures and options, right? And then there is a small cap in cash, or there is a mid cap in cash, or if there is a large cap in cash. So these are the basically criteria. So basically what we have now is we have stocks which are divided in large caps, mid cap, and small cap. Micro cap bhi hota hai, but I'm including everything in small cap below this. Then further on there is 2 division of stocks. One is futures and options, another is cash. अब कुछ stocks होंगे जो futures and options है, काफी सारे cash में होंगे. So when you are trading in cash, you would be expecting that you have a stop loss of 2%, 3%, and if you have built a position in cash, you would be expecting a move of 10, 20, 30%, right? If you go with the same expectations here, you know what you are playing for, right? And if you are a futures and options player and you are someone who's only accustomed to a 2-3% move, and you go with this expectation here, you will fail miserably, no matter who have taught you, what concepts he has taught you, if you don't have clarity and the right perception about this thing. So I hope this is clear, and there is something important which is hidden in this learning, which I want you to think about, that how now this is the basic division that exists in the market. Now out of this I've made a concept which, if somebody has been watching my YouTube videos, was available on the older channel. I gave it in the public. So now what you have to do is you have to further make a simple category of a stock. Not exactly a category, but how do you define then stocks? How do you know which stock will move 10%, 20% versus a stock that can only go to 3-4%? How do you decide that, right? So now think about this concept and try to come up with something on your own. Just make your observations, and please understand, no one is right, no one is wrong. Basic observations is needed. So here that is one assignment I'm giving you. So this is the very basics of perception of how you view the chart. Now what we will do is now we will go on to the charts and we will see exact same thing happening over there, so you get more clarity. So now we are on the chart of Dr. Reddy, and Dr. Reddy is a large cap, and this stock is traded also in the futures and options segment. Okay, now let's see the chart and let's analyze how the stock has been moving and how it moves. Okay, so see, this looks a good up move, right? So let's analyze the candles here. This looks like a very good candle, but see the person here. This is where it is reflected. How much is it? 2.22%. How much this is? 2.32%. How much this is? 1.93%, 0.96%, 1.64, again 1%, minus 1, plus 1.7, nothing. So you saw how the stock is moving. Now see here, there was earnings here, and because of which there was a 7% gap down. We'll be explaining this, what happened, why happened. But again, see, on because of some, some news, some earnings, minus 7%. Okay, great. This looks like a great candle. How much is that? 2.47%. Okay. Now let's see some more data here. Let's go in the past and see here. Earnings minus 10%. Okay. And before that, let's see. This was a breakout, 2.5%, 3%, minus 2%, minus 1.97, plus 2.95, minus 2.29, plus 3.80, plus 4.97, minus 4.40. And rest of the days, see how the stock moves. Basic, the range is plus 2, minus 2. Okay. And here you see something happen. This will be explained later on. Again, 10% up move. So this is what you have to understand. Now, if you go back a lot in the stock, when the stock was not as liquid as it is right now, the movement will be slightly different. So now let's let's say another stock of, I would say, let's take ACC, a stock like ACC. Now this stock is not in your futures and options, right? Now see the kind of momentum. Minus 7.28 followed by minus 13%. Okay. Plus 6.2, plus 2.8. See, but this is a very good liquid stock, right? This is a good stock. So just keep observing the percent change here. Plus 2.89, plus 5.98. And how frequent these are happening. Not very frequent. True. Now let's take a stock something like RVNL probably. Now here, see the movement. Plus 9.84 followed by plus 13.323, 20%, 4.22, 10, 9, 9%, 10% again, right? So you saw the kind of moves. Again, see here. 6, 7, 10, 6, 11. So you see how frequent the movement is. Okay. Now I'll give you another good example of something called as Deepak Nitrite. This is a stock which was not in futures and options but was included in futures and options. And I'll give you the difference, the stark difference you can see in how the price is moving, how the stock is moving compared when the stock was not in futures and options and it was only a small cap, mid cap cash stock. Okay. So we will see that now. So if you go in this, in this time period, in this duration, the stock was not in your F&O segment. Okay. See the movement here, 16% up, 7, 8% up, 7.42 again, 4.8, 4.68 again, 7% up, 5% up, 8% up, 14% up, 8% up. See the kind of clean moves, 7%, 8, 8% up. And after that, I think somewhere here, it got included in the F&O segment. And since then, see the difference. The stock was smoothly going up, but now see the kind of movements. What was happening here was the down move was there, right? The stock was going down, but the down moves were very simple. See the candles. But here, now see, the volatility has just gone berserk. Why? What is happening? Because the pressure is both. There are 4 kind of traders here, right? There are buyers, then there are sellers who will buy. उनका स्टॉप लॉस हिट होगा, तो 2 काइंड के बाइंग प्रेशर है और उसी टाइप से 2 काइंड के सेलिंग प्रेशर है. तो the volatility is a lot in these kind of stocks. See, it was going up 9.49% smoothly up, and now it is falling just like anything. So you will question what is happening. But the thing is, F&O stocks का एक characteristic है that they have volatility on both the sides, right? So either side takes off, the stock zoom, If nobody takes, nothing happens, you know. So this is very important for you to understand. Let's take any other example. Let's take fact, one of the greatest trades. So see now how the stock is moving, right? Down move is there, but do you see the volatility? No, it's a simple and pretty smooth up move, right? See the kind of up moves, 12%, 19%. This is called as perception that you have to have with every stock. Let's pick Hindustan Unilever and see what is happening. See the kind of move it gives you. 2.2%, minus 2, minus 1.54, plus 2.76, minus 1.2, plus 1.8. Now hear me out. Let's say you were trading here, some setup that I will teach you. You were using that setup, and let's say you bought at the blue line. Okay. Now let's figure out your stop loss. It will be 1.28% stop loss. You bought here, you made 3% here. So your stop loss was 1.5%. Your reward was 3%. That is 1:2 reward. Okay. Everything looked great here, and then this happened. Now you will question that why this happened. Well, the thing is, again, you are dealing with an F&O security. There is a volatility and pressure of both the sides. Now same thing, okay, we'll see a similar pattern like this, but on non-F&O stock. We will see it on a cash stock, and there you can see how the movements differ. So I'll take fact, and you will be buying somewhere here. Your stop loss is 3.5%. Let's say your stop loss is 3.5%. Let's see how much did you make. You got a potential of 50% returns. Now why is this happening? Because the thing is, there is only one thing happening here, that is called as buying, so that is very, very important for you as a trader to understand. Because now what will happen is, let's say you are not someone interested in trading futures and options. So why do you even bother watching their charts, right? You're only interested in the cash stocks. And if you're trading the cash stocks, you want your stocks to move 10%, 12%, 15% in 3-4 candles. Okay. Now, if you have similar expectations from an F&O stock, it can happen, but then it will take 5-6 months to go 15% from your buying point. And within that also, there will be a lot of volatility you will have to face. But when you come to cash stocks and you see the chart, get the feel of the chart, you will see that this stock has the capability that it can go 15-20% in 3-4 days. That is where I'll park my money, because now consider there are 2 people here. Okay, so let's have persona of 2 people here. I'll delete this. Person 1, he understands technical analysis. Okay, I'll write TA. He understands risk management. He has good capital. He doesn't have perception. That is one person. Now yahi pe, just understanding of this and create a person 2. Okay, he understands everything, but he has perception. Okay, so now what will happen with this guy is, he also understands technical analysis. This guy has risk management, has good capital to trade on, but he has perception which he understood from Rich Road. What this guy will do and what this guy will do, I'll explain. This guy will see a setup in F&O stock. Okay, F&O. This guy will also see a stock in F&O. Okay, now before watching this F&O stock which they are watching right now, in the past they both traded a stock called Fact, which after buying went 40% for both of them with a stop loss of 3%. Okay, but this guy knew why did that happen. This guy did not know, because he doesn't have the perception. Next time when a stock comes in FNO, they see a setup which is very similar to fact, but it is a FNO stock. Now this guy thinks that okay, the last setup I got did the same thing, so I think this should also. What he does is he increases his capital here. He puts more capital with same expectations. But this guy is a student of Rich Road, and he's like, okay, it's a good setup. Everything which has been taught, it is there, which was there in the past stock. But the catch is, this is an FNO stock, and there is no event happening. So he knows कि अगर मैंने यहाँ पे stop loss 3% का लगाया, so I think the good move that I'm going to get in next 3-4 days is only going to be of 3-4%. So do I really want to risk my money here? He'll be like, no, I'll skip. He'll skip that. This person has the expectations of what, 40%. Let's say the stock moves 3-4% and this guy is jolly. He's like, I told you, trade that, now this is up 4%. I'm in handsome money. This guy knows what's going to come down, and then this stock does nothing for the next 10-15 days, and in those 10-15 days this guy gets 3 good cash setups and he makes 10%, and this guy's like, well, you just got lucky. But I hope now you understand why this guy knows. So this is what simple idea or understanding of perception can do to your trading, to what stocks you trade, what kind of mental model you use to trade that stock, and what kind of perception you have. Because अगर perception सही है तो काफ़ी सारी चीज़ें आपकी ऑलरेडी सही हो चुकी हैं, जिनको आप probably market is probabilistic blame करते हो, chances पे blame करते हो, luck पे blame करते हो. This is the whole point of building the perception, because once you have the perception, काफ़ी चीज़ें आपकी solve हो जाती हैं. And even with this simple concept of perception, you can build some concepts that will help you a lot. Here also, there is also one thing that you can observe. Let's say this person too is watching this chart. He understands the concept of perception. I view the stock fact, and let's say I'm watching the stock here, okay, somewhere here. So I saw that, okay, this stock moves up, and whenever it moves up very good. Yeah, both of the times the stock has done this. कि ये स्टॉक जब भी ऊपर गया है काफ़ी अच्छे से ऊपर मूव करता है, both the times. और अभी इसने मुझे एक सेटअप दिया है. मेरा परसेप्शन ये कहता है इसने पास्ट में जो मूव्स दिए वो बहुत अच्छे थे जब भी इसने सेटअप दिया. तो आई थिंक सिमिलर यहाँ पे भी होगा, एंड एग्जैक्टली सेम थिंग हैपेंड हियर. वहीं पे जस्ट थिंक अबाउट समबडी हु इज with the same mental model. He's coming to Reliance, okay, and he finds a similar setup, similar looking setup here, let's say here, and he draws this line, breakout level, right? And let's say कि उसने यहाँ पे कहीं पे buy किया here. उसके पास perception नहीं है, but person 2 के पास perception है. He's like, okay, let me see what happens here. On good days the stock is moving 3.84%, 4%, 2%, so 6% on one day. Interesting. 2.67%. Now he says that okay, whenever the stock is moving nicely up, it is moving 2-3% up, but whenever the stock is coming from the bottom, bouncing, it is moving 6% here, 3.3 here, 5.3 here. Interesting. So what he will plan, if he can buy here, then he knows it can move good, and it moved 3.8%. But then after it, what happened? Let's say he bought here, it moved 10% up, but after that, see, came down. But this guy, person 2, know what he is going into, so he will start booking his profits here. Okay, that is one thing. And see, it has been happening all the time with Reliance. You can see it for yourself what happens now. So this is very interesting, a basic thing about perception. Now let's take another example of perception. So see here, this guy, he's watching that stock here, he's watching it here, and he's like, okay, chart looks interesting, but it is not very clean. And he's like, okay, why is it not clean? He's like, see this, you gap down a lot. How much did you gap down here? If you see, okay, almost 10% you gapping down. You go up 10% up, you come down 20% down. And are these candles good? no, these are very volatile, right? Stock did go up, but the volatility is immense. And if I just zoom out, well, the chart doesn't look good. See how it is moving. See the kind of wicks it is forming. So yeah, it looks not very great on the eyes. But then he sees that, okay, Shreyas, what does the work it do? Okay, it is in shipping containers. He will go and see Cochin Shipyard. And then what he sees this stock here, and then he sees this, okay, interesting. The stock looks interesting, and then he sees this. Okay, the stock is moving 12% up, 9% up, 6% up here. It looks great. There was a gap down, probably due to earnings, but after that, it is going good. He goes to the left more, and then he sees it again. He's like 10% here also, 4%, 4% again, 10%, 8% again, 6% again. So he's like, okay, this stock looks interesting, right? And he decides to skip that and buy here. And that guy is me. Another stock, GRSE. Another. He sees the stock and he's like, okay, how much is it moving? 7% up, 8% up, 11% up, 7% up. He sees the stock here and he knows what to expect. What to expect as in, this stock has been moving in the range of 10 to 7%. So I think similar thing can happen, right? 7.93%, 8%. If you buy above the high here, if you buy here, 9.82%. Interesting. Let's see more. This guy is trading here and he sees, okay, the stock looks decent, not something interesting. Then he sees the candles and he's like, okay, once move 10% up, then again 4.29% up. Interesting. Then he sees this, that okay, the stock here, see, looked promising. It broke above two upper circuits, but then it came down back again. Interesting. He sees the stock here and he's like, okay, the stock moves good, 13% up, but then comes back down again, and there is a lot of volatility in the stock. Here the stock was good, but again see the kind of rejection that came. So now he has a perception for the stock. So he does this, he draws this black line, and this is where he trades, but he knows how much the stock moves, 10% or somewhere, right? Top, maximum 10% in total. 15% stock moved. What happened after that? Came back down completely, right? Complete come down. So somebody who's bought here, he knows where to book the profits. He knows what to expect just because he has the right perception of a stock. Similarly, if you take any stock, let's take the example of Tanla. Here, he sees that, okay, the stock has been in downtrend, so there is no point seeing the up moves. He sees in the uptrend, the stock was very liquid, but it was moving good. Then as of recent, he sees that the stock moved in a single day almost 12%. Interesting. See what happened to the stock. 16% up, 5% up, 3.27% up. And if you calculate this here, almost 10% up. And this was 11%, 12%, whatever. So once you have this perception, you know what to expect. And once you know what to expect, just think about it. Can you not build a selling strategy around it? I'm not even talking about buying, but can you not design some selling points about it? How you're going to do. Let's say I give you a stock and I ask you, what is the selling strategy? That is selling. By selling, I am not saying short selling. I'm saying if you have a long position, where do you book your profits? Can you now create a mental model around it? You can. You can also create a mental model which stock to trade for how long, which stock to put a lot of money in, which stock not to put a lot of money, which stock to avoid, and which to analyze. So just think out loud. There are these kind of scenarios possible. The first one is you see a stock, and historically it gives move of 10% in a single move. When I say single move, I mean that there is no red candle or a down move in between, only green candles continuously. So you see that there is a stock which gives you 10% move, but it gives that in 5-8 days. So let's say you bought that stock and it has been 6 days, and now your portfolio is showing that this it is up 11% up. Can you not take a decision that I think I should book some profit here? Now, a lot of profits, some profits, we will go into immense depth and detail in the coming weeks. So don't worry about that. But at least you have a perception. Second, you see a stock which is setting up and you're planning to buy. Then you go see historically what it has done, and you see that this stock has the potential and capability to move 10% in a single day. So, what does that mean? That if you buy the stock, you can hold it for, or you can expect it for a 10% move in a single day, right? Exactly, right? So let's say you bought the stock and in morning you see that it is a 4 or 5%. Will you start selling your stock? No. Will you start saying that sell in strength? No. You know what the stock is capable of. So what you will do? You will give it time. You will wait. How you will do that? I'll explain later on. But at least you have the perception. Another, you see a same setup here, but then you see that it only moves 6% in a good day. Never more than that. Or just a little bit more, 7% or what? Just a little bit. And then you see you bought the stock and it is moving and it is up 5.8% or 6.1%. What should you do? Should you hold that no, the last stock also went 10% up, this will also, or will you book? You will book, right? Again, then you see a stock which in 4-6 days can go for a 40% move, and you bought the stock and it moved 8% up, and your stop loss was 2% for 4 hour, right? I'll explain all this later. What will you do? You will sell the stock, or will you say that I know what is going to happen, the probabilities are aligned, so I'll be in there with all my quantity and I'll wait? Yeah, you will do that simply based on your perception. And then you also see a stock which moves 15% in a month or 2 months. What will you do? You will avoid that. Easy, right? Simple. So you'll see that this is a pattern which happens in FNO stocks. So if you are a cash trader, and I say that if you have a capital anything beyond or below 10 lakh rupees, or around that figure, please avoid futures and options, because futures and options are by default leveraged to an amount of 7 lakh, 8 lakh, 10 lakhs. So even if you buy one lot, you are leveraged almost your entire capital. So the risk management is not going to be that great. But obviously, once you are skilled enough, you can go for that. But let it be for now. So just with the right perception in the right context, you know what stocks to buy, for what kind of move, and approximately for how much percent you have to hold, how many days you have to hold for, and more importantly, what kind of stocks you have to avoid. So just the simple concept, which is our introductory concept of perception, can help you maneuver around these kind of things that are being sold, that is selling in strength. I mean, this is a great concept if understood and implemented in the right context. That is very important. The knowledge is important, but in the right context. And what is happening is people don't have the right context, they are just going about anything. So with simple concept, now we have decided a lot of things, but just know that this is a introductory class to get you all on the same page. you know so yeah, now your job is to watch this video easily, aram se अच्छे से, make your notes, and there are a lot of great things that you can see here. I can see around which very important, a very groundbreaking concept will be introduced in the upcoming session, probably live session, or in the probably next recorded video, as I see how the group is evolving. And that will change a lot of things, that will simplify a lot of things, and that is a concept that kind of um, summarizes everything that we will be doing in the next 2 3 weeks. So I hope this added a new perspective. I hope this will give you a good shift. And the thing is, immediately, if you now whenever the video closes, you go to the charts, see your speed, compare it. It's going to be at least 5x of what it was before. Definitely, you know, because now we will go to the concepts of smoothness, you know, and all those, which will further down improve and increase your time. So I hope this was a great learning session with me, and I'll see you in the live sessions.